Hello traders, how are you guys doing? Hope you guys are doing fine just like me. So this is our lecture number 3, and if you're watching this lecture, it means you're done with our previous 2 lectures. I would not advise you to continue with this lecture if you've not understood the previous 2 lectures. So in that I mean, go back in the other 2 lectures that we're done with, go through again over and over again until they make sense to you. And if you don't grasp anything, then contact me personally, or any of my team members will be happy to help you through. So this lecture is about the 2 things that I mentioned before: the ask, bid, and volume. So volume, I've just added volume, and I will explain to you what volume is in a few. So let's start. So in the previous lectures, we covered the DOM, or the order book, and we understood that the order book only has what we call passive orders. And passive orders, of course, 2 types of orders: the buy limit orders and sell limit orders. We said buy limit orders and sell limit orders do not transact between each other. No sell limit order can sell to a buy limit order. There is no transaction between the passive orders, and still that is the same thing that applies to the aggressive orders. There is no transaction between the aggressive orders. That is something you have to note down. We said buyers can only sell buy from aggressive sellers. Listen carefully. Limit buyers can only buy from aggressive sellers. Limit sellers can only sell to aggressive buyers. You have to note this down. Limit sellers, or limit orders, or sell limit orders, or I don't know what you like to call it, but it is the same thing. Passive sellers, or limit sell orders, or limit sellers cannot sell to limit buyers. I'll repeat that one more time. Limit sellers or limit buyers do not transact between each other. No transaction can happen among the 2. So buy limit orders or limit orders, as a general, only transact with aggressive orders, and this is something you have to note down. So in summary, buy limit orders only buy from aggressive sellers. Listen, buy limit orders only buy from aggressive sellers, and sell limit orders only sell to aggressive buyers. So let's continue. Let's continue with today's lecture, and today we shall be covering ask, bid, and volumes, and you have to be very attentive for this lecture. Like I said, we are still covering the foundation of order flow, or the auction market theory, and these are things you have to really give attention to and master. Without you mastering these things, order flow as a general will not make sense to you. So we said, what is ask and bid? And we know at the ask and bid from the order book, like we've just said, we only have passive orders. Passive orders, I'll repeat last time, passive orders. So if we have passive orders from there, it means if we come as a general, we do also have aggressive orders. How? At the ask, we have limit sellers or passive sellers, or limit sell orders, whatever you like to call it. It is the same thing. And if we do have limit sellers, these limit sellers can only sell to aggressive buyers. Look at what I'm doing. It can only sell to aggressive buyers. So at the ask, it means we have 2 types of orders. We have plenty, but let's focus on these 2 types. Majorly, the 3 types. We're going to focus on these 2 types first. We do have limit sellers, and these limit sellers only sell to aggressive buyers. So we have aggressive buyers or market buy orders. This is the same thing. We do have passive or limit sellers, and we have stop buy orders. Stop buy orders, what I mean that is close stop loss or take profit. Stop loss or take profit. I'm going to dive deep into this concept. So at the bid, we said we have aggressive sellers or market sell orders. We do have passive limit buyers. We do have stop sell orders or stop loss and take profits. Let me explain this deeply. We said a buyer is filled when your order matches with a sell order at the ask. Look at this. For a buyer, an aggressive buyer, your order has to match with a limit seller for a transaction to happen. Now, we are not looking at the depth of market. We are not looking at the order book. We are looking at the smart tape, or we are looking at ask and bid in general. You have to note down these notes. These are very, very important. For beginners, newbies, I don't know what to do for you because I feel like this concept is just going to go over your head. But if you give this attention, you're going to understand. And this will be very, very helpful to you. So, how trades actually close, or how do trades actually get filled? A buyer is filled when your order matches with a sell order at the ask. So if you do press your buy button for your order to get filled, it has to match with a limit seller. You're buying what someone else is selling. I don't know if you guys get me. You are buying what someone else is selling. So your orders have to match. You as an aggressive buyer has to buy from a limit seller. So for your orders, for the transaction to happen, your orders have to match. So it simply means you're buying what someone else is selling. Let's get to the seller side. A sell order is filled when your order matches with a buy order at the bid. At the bid, from the order book, we do find buy limit orders. For a sell aggressive order to get filled, it has to match with a buy limit order. So you're selling to someone who is willing to buy. Do you get my point? You're going to get my point. So closing a trade is considered as a separate transaction. When you do close your trade, that is a separate transaction. What do I mean by this? Now, what do I mean when I say closing your trade is considered a separate transaction? Listen, closing a trade is a separate transaction. It's simply pressing the trade in the opposite side. Unless you automatically preset it, it is not stop loss or take profit. What do I mean by this? If you are in a short, a sell trade, if you do press that close trade button, it means you have bought. Do you get my point? If you are in a long and you do close that trade, it means you have sold. That is why it is considered a separate transaction. If you do sell something, you get my point? And it is cheap, it's higher, it's expensive, you do sell it. If you do close your trade, price has gone down, it means now you have bought it for cheaper. That is when you make profit. You get my point? If you are in a buy trade and you bought something, if you do press that close button trade, immediately when you press the button, it means you have sold. And you bought it cheap, you sold it expensive. That is the only way you can make profit. Now, here's a scenario. Yeah, let's say you find some rare stones. You get my point? You do find some rare stones. Let's say not you, your friend finds some rare stones. Then he comes to you, Kevin, I found these stones. You're like, which stones are these? Then you make some research. You find out these stones do have value. Do you get my point? Stones do have value. And people have been buying them very, very expensive recently. So you go to a pawn shop, anything, then you sell them the stones. Let's say the stones are selling for 1,000 US dollars. Then you do sell the stones at 1,000 US dollars. And your goal is, after some time, the stones will no longer be a trend. They will be cheaper this time around. So after 1 month, you go back to the pawn shop and buy the stones at 500 US dollars. So you get the stones and take them back to your friend after the transactions are done. You just made profit of 500 US dollars without you owning the stones. I don't know if you get my point, but you got them and sold them. Do you get my point? You sold them at 1,000 US dollars. You came back and bought those very stones for cheaper at 500 US dollars. So in between, you just made profit of 500 US dollars without you owning the stones. It is the same type of transactions that we do have in the market. I don't know if you get my point. You come borrow the stones from your friend. Help me with the stones, bro. Let me go check out something new. You know, whatever lie you might tell them. Get the stones, take them to a pawn shop, and sell them very expensively. You get 1,000 US dollars to you. You come back after a month, the stones are cheaper. Price of the stones has been declining or anything has happened. You buy the stones at 500 US dollars. So you made profit of 500. You get my point? Went in, took the stones, they gave you 1,000. With that 1,000, you took 500, paid them back, got the stones, and remained with your 1,000 without you owning the stones. You get the stones, take them back to your friend. So this is the transactions we have in the market. And if you buy and do not sell, you're not having a complete transaction. I don't know if you get my point, but that is considered a separate transaction. Do you get my point? You bought them, transaction done. You came, sold them, transaction done. Two separate transactions make up one trade. I don't know if you get my point. You're going to get my point by force. Now, let's continue. A manual close executes instantly at the market, while take profit or stop loss are just pre-placed orders. You do place your order that trigger when you're in the same closing what? Process, but it's still an order. Do you get my point? I'm going to get back to this. I'm going to get back to this in right now. Let's continue. Now, listen, this is the example. If I do place my sell limit order up here. And in my mind, I know price is gonna get here, then reverse. And I've made my analysis and I'm sure. Then I do place my order there. If this order gets activated, that is a different transaction. And on your smart tape, because here I'm planning to sell 2 contracts by limit order. If I do place this order, it's gonna show in the DOM that someone has placed 2 contracts to sell on the limit order sell side, the ask side. Then if my order gets activated, it means someone aggressive has bought from me. Listen carefully. Someone aggressive has bought from me. So that order will also be registered in the smart tape that shows 2 aggressive buyers were in the market. You get my point? 2 contracts were bought aggressively. That will print. Then if this order goes to my take profit, that will be registered as a different trade. It will be printed in the volume as a different trade. What do I mean by this? I sold here. Take profit, it means buy. When this order gets filled here, when it goes to my take profit, it will be considered a different trade. It will also print differently on the smart tape. It will show 2 contracts were bought aggressively. You get my point? It is gonna be separate trades. Now, hopefully you get this. Let's go back to the lesson. We were saying closing a trade is a separate transaction. It is simply pressing the opposite order. So your take profit, if you're buying, your take profit is a sell order. If you're selling, your take profit is a buy order. Same applies to the stop loss. You get my point? Yes, you get my point. So a manual close executes instantly at market, while the take profit or stop loss are just repressed or set orders that trigger the same closing process. Trades close through matching, and the price only moves when aggressive orders consume available limit liquidity. So imbalance equals movement. You get my point? More aggressive buyers than sellers, if we do have that inefficiency in the market, equals to price movement. Okay, let's continue. This is the core logic of the option market theory. So I have covered 2 things. I've covered 3 things so far. 2 things so far. We've covered the smart tape and the DOM or the order book. We haven't covered the footprint, but I'm going to that immediately after this. So on the smart tape, what does it show us and how can we use it? The order book, how we can use it and what it shows us. Let's get into it. So the smart tape shows you real-time executed trades printing through the tape price, volume, speed, and aggression. We're going to get to that. And how do we use it? Of course, we can use the smart tape to track the activity of large players. How? It is used to detect momentum, absorption, spoofing, exhaustion, and aggressive sellers or buyers in real time, not just retail candlestick, open, high, low, and close. Okay, the order book. The order book is used, or the order book shows you the passive orders. Like we said, it shows you resting, limit buy or sell orders sitting at different price levels. So simply the order book shows you liquidity, right? So we use it to identify areas of liquidity, or simply in your retail language, support or resistance, absorption zones, and potential price magnet. Why? Whenever there is money, price wants to go there. So whenever there is a huge limit wall or huge liquidity wall, price always wants to go there. And where did we say we find a lot of liquidity? Because now we just covered the core concept that your stop loss or take profit acts as a different type of trade. So that is calculated as different volume. So most of the stop loss and take profits act as liquidity. Do you get my point? Most of the stop loss and take profits, stop losses and take profits act as liquidity because this is different volume. But we all know traders lose more than they make because 97% of traders lose money. So a lot of liquidity is found in the stop losses. Do you get my point? And where do we find the stop losses? And the highs and lows, swing highs and swing lows. So I enjoy teaching. Oh my God, let's continue. Let's just continue. So we have understood that the order book will help us to identify areas of liquidity or areas of support and resistance or areas of potential price magnets. Potential price magnets, areas where we're going to find liquidity. Where? On your stop loss. Let's get to the footprint. Footprint is simply showing you the exact bid and ask traded volume in real time of each candlestick. You get my point? Of each candlestick. And how do we use it? We use it to read imbalances, trapped traders, absorption, exhaustion, and true order flow inside the candle. Order flow. What is the meaning of order flow? Orders flowing, because now you know all these orders are registered separately, different volume. Whenever you send an order, it goes direct to that exchange market you're sending it to, and it is registered. Kevin bought 10 contracts, and that order, you're able to read it. If it's someone that bought, let's say John bought, I can see that John has bought using my ATAS platform. Let's go straight to the next part. So everything we have covered is not only theory but also practical. Now that we've covered the core logic of order flow, or what I might call AMT, or the auction market theory, we want to put everything into practical. We want to understand the practical part of each idea that we have discussed. And here with me right now on the screen is what we call the smart tape. It might look confusing, or it might be easy for some of you, but I will explain everything and the advantages you have when you use the smart tape on the ATAS platform. So let's get straight into it. So on my left hand, I have time. Then from time, I have price. From price, I have volume, traded volume. Then I have speed, and I have buying and selling power. So let me explain. Time is the time where the trade has been taken. Then I have price, where the trade was bought at that particular price. I do have the volume of the traded price right there. Then I have speed, at the speed which the participants are participating currently in the market. Then I do have my buying and selling power. Buying and selling power, if it's bigger, the red is bigger than the green, I know I have more aggressive sellers than buyers, because this is the smart tape. We are dealing with aggression. If the green is bigger than the red, then I do have more buying than selling power. So it depends, whichever color you like. Everything is customizable on this platform. As you can see right now, what I have marked is the maximum trades. You can see right here we have 6, right here we have 19.8 volume. That is why it's going to be highlighted. The rest won't be highlighted. It depends how you want to filter it. So let's go straight to the settings. So in my settings, I have what we call filters. And what I like with ATAS, we have what we call cumulative ticks, or cumulative volume. So what is the difference between the smart tape from the ATAS platform and from other platform? From the ATAS platform, you will have all your data. You have two choices to make. You can let it be the standard smart tape that you can access from all the other platforms, or you can let ATAS put everything together for you. So if I untick this, you will see that I'm getting all the orders, even the zeros. I'm receiving everything, literally everything. So if my smart tape is like this, it is very hard for me to focus, because all the trades are coming to me the same way they're going to the market. You get my point? The 0.1s, the 0.2, everything is showing, and it is very, very fast. And it is very hard for someone to focus on such a thing. Now look at this, all this highlighted. This is one big trade, but it is split the same way the algo will place this trade into the market. It is the same way I will receive it. But if I take my cumulative ticks, ATAS will put all those trades into one single trade, like right here. And I'll be able to focus on those single big trades. Like right here, I have negative 21. So I know there's more sellers than buyers in the market, and my buying and selling power is also confirming the same exact thing that I've just explained. So you can also come to your settings, then colors, and change whatever color you like. Maybe you're buying, you want it to be white, and you're selling, you want it to be black. So whichever you like is the same thing you're gonna set, my friend. Meanwhile, for me, I love to work with the greens because they are more easy for me to spot. Okay, so I will just leave it there. Another thing is you have alerts. So you can mark out the volumes from your chart and come set those alerts. Let's say ATAS, I want to work with the volume. Let's say I get maximum volume of let's say 30 trades. ATAS will send me an alert, like you see right here. Let's say it's 15. ATAS will send me an alert, like you see right here, and I will be able to focus on that particular price level. But I don't want the alerts right now, so I'll remove that. And sound, you can put whichever sound you like. Yeah, I think that is all. You have 2 templates to decide from. Most of these things, I don't want to be teaching you how to use the ATAS platform, because I don't really have time for that. The ATAS platform, you can always visit their website or their YouTube channel, and you will access the videos or the courses they will give to you about ATAS functionality and everything. Right here, we want to focus on how to master the market. and that is what we are going into right now. So most of the times as a trader, you will not be able to visit, or you will not be able to use the smart tape as your own trading strategy. I don't use it. Why? It is so fast for me to focus on it to get trades. It is very fast, though I need it for some of the confluences, and I will be showing you how I need it. So from this, let us be very, very quick and go on to the next thing. And we say the next thing is the depth of market. Now, the depth of market, most of the times, it doesn't look like this. I've only set it this way for you to understand it the same very way I've been explaining to you guys. We have price, we have the bid, and the ask. And from the depth of market, sorry, I don't know if I mentioned the depth of market. So this is the depth of market. From the depth of market, Atas has what we call the smart depth of market, or the smart order book. I will show you briefly why it's called the smart depth of market. Regular DOM looks like this on other platforms. They will show you the bid and the ask, buy limit orders, sell limit orders, and you will see orders there. Using the bid, most of the times we want to see areas with huge liquidity or huge orders, like you see right here, and we know such areas will kind of cause price movement being slow, or they will cause rejection in such areas, or price will be stopped. Most of the times the DOM is very fast, not most of the times, all the time it is moving very fast. And what we want to spot on our DOM is to see if areas of huge liquidity are going to hold. That is personally how I use it. I don't know other traders, but I want to see where spoofing is going to happen, because I can do access the depth of market onto my chart, the heat map. I can access the depth of market. So I will not be using this most of the times, really. But I do come here to see if areas the heat map is giving me that are of huge liquidity are going to hold on the depth of market. That is what I want to see. So let me just take you through briefly on the depth of market. So you have these columns. So let's say I don't want to see price. I can just come here, price, delete, and price will go away. So all I have is bid and ask. But of course, you need price because we are working with price. So add price. And let's say I want price to come in the middle. I can just do up or come this side. I can do down, come this side. So wherever you want it is where you will put it, my friend. So price is in the middle, right? So let's say I want to add something else of purpose, like the footprint. So the footprint will be the candles. I want my footprint to go there. I want my footprint to be of 1 minute each. Maximum number of candles, let's say 20 is the maximum. Fantastic. 20. Depth, width, everything is okay. So I want my footprint to go onto my chart, and it's up there, and I want my footprint to go onto my left hand side up. So it is right there. So footprint will show me the candlesticks of 1 minute. So as the DOM is moving, this is our current price, the white line, and we can see as price is moving, see right there, current price, start open, this is our current price, yeah, always this will be our current price. Price is moving, and we can see footprint building, yeah, and our footprint is showing us the volume, right? 2 trades, you can see 3, now this 8, you can see how it's building, yeah. I just want you to take time and see and look at this. So we can always set it, yeah. Probably I don't want to look at the volume, I want to look at the difference. Come right here, footprint. Then what do you want to look at in the footprint? I want to look at delta, difference between buyers and sellers, and you can see, you can look at this. Take your time and look at how volume is building. We've decided delta, so delta would show us the difference between buyers and sellers. I'm going to explain that in a minute, yeah. Look at this. So we have 40 more buyers than sellers, 10 more sellers than buyers. That is why it's a negative. 1 minute candlestick, 1 minute candlestick, footprint. It will only show you the bodies. We can always set it how you like it, yeah. So not to confuse you, I think that is done with our DOM. Let's get straight into our next part. How can I apply this knowledge into my trading? Now that, Kevin, I have mastered auction market theory, we've mastered the ask, bid, aggression, limit orders. In general, we have covered the core foundation of order flow trading. How can I put this foundation, or how can I put these logics into my trading on a day-to-day basis? That is the part we are going to next, and stay tuned. So on my chart, what I have right now is the footprint, not the candlesticks. But we're going into the footprints, yeah? So these are candlesticks, and I know many of you know how to read candlesticks. I've taught you how to use candlestick patterns. I've taught you how to use the hanging mans, the moonlight stars, the everything. There's a lot of crap that I've taught you guys. But we want to dive into what is actually inside the candlestick, because now that we know, we have studied candlestick movement, we have studied what actually is inside the candlestick, the prices and the transactions. We want to know exactly how we can apply such information into our day-to-day trading. So my candlestick looks like this. It's showing me the value area, 70% of the traded volume inside the candlestick and the rest. But I want to set it in a way that you guys can understand, and that will be me putting it to the delta colored centered perfect right here. So I will remove the value area. You can always come. This is right click, settings, footprint, full row, bid and ask. Then you will come value area and check. You're gonna see this go away. Fantastic. So all I have is my candlestick bid and ask. And what did we say? We said at the bid we have what we call aggressive sellers, at the ask aggressive buyers, and that's what the candlestick is showing me. That is the only information the candlestick is showing me. So I'm on the 5-minute time frame. Each candle here stands for 5 minutes, and I want to show you guys something, or we want to first learn how these candlesticks are printing. So what you see is the candlestick, and what you see here is the body. The white bar is the body, and white is my bullish candlestick, red is my bearish candlestick. So my bullish candlestick is white, and the bar is the candlestick itself. So the rest is the wick. I don't know if you get my point. If you can look closely inside, I do have the black line. Let me just change the color so it is a better mode for everyone to see. I don't want to confuse any of you guys, so I will do this instead. Fantastic. Right there. So you can see candlestick right here, and this is the wick. Candlestick, no wicks, candlestick right here, and wicks. Wick high, low, candlestick, wick, candlestick, wick. So I know by now you understand what I'm trying to bring up. So if we look inside a candlestick, like this tiny candlestick, we do have the wick, the low and the high. And on our left hand side, or on this particular side, we do have the aggressive sellers on the bid, the aggressive buyers on the ask side. So what you see highlighted, because general color for my footprint is white, what you see red is the imbalances or high volume. I will explain. What you see green is the imbalances on my ask side. Imbalances, the red ones, imbalances on my bid side, imbalances on my ask side. What you see yellow is the highest volume in that particular candlestick, and my highest volume will be also bordered or highlighted with a white outer lining, and you can be able to see white outer linings in each and every candlestick. So let's enter one particular candlestick where we are going to study everything inside it. Let me choose randomly. Let's look at this bearish candlestick. So if you look at this bearish candlestick, you can see that areas with high volume have the red in it, and the brighter the red, the more the volume. The same shade of red in this particular bar or cluster is not the same shade of red in this particular cluster, and that means the more the volume in a cluster, the more it is likely for price to respect that particular level. So let's go into the settings, yeah, and show you how you can customize each and everything for your own self settings, footprint, and right here. So we can see this is our candlesticks, our footprint right there. You can change it to delta if you want to see delta. You can change it to bid and ask profile, but I want to see the full row, yeah. So that is a full row color scheme. You don't need that additional footprint. You can also add on the volume. That is if I turn on my additional footprint. So I can see that in this particular cluster right here, I had 155 55 aggressive sellers and 33 aggressive buyers, which makes a total volume of 188 trades. So easier, but I don't like that because for now it's confusing. I can change my candlestick from the candle to the body, so it will only show the body, but I know that this particular bar, the white bar, is the body of the candlestick, and above it is the high, below it is the low. You can always change it, but I want to see the candle, so it is also easy for you guys to see, though it's kind of confusing, but it's very easy to know this is the high, this is the low. What you see red, let me remove this. The red clusters, that is my negative delta. The blue is my positive. So that simply means what you see blue cluster, it means there's more aggressive buyers than sellers. The red, it means there's more aggressive sellers than buyers. And these candlesticks, or these footprint clusters, you can always change the settings to what you want. Let's say I don't want to see the bid and ask. I want to see the number of trades in a particular price level. So I'll come here, bid and ask, you see, clusters. I can switch to volume and it will show me volume. So it is simply now telling me at this particular level, in this particular cluster, I have 153 contracts. Those are contracts, 153 contracts. Or I can change it to trades. It can still tell me I have this particular level, I have 176 trades. The volume is different from trades. You have to note that. I don't want you to confuse the two. So let's look at a particular level that I will outline right here. This particular level, 2329, right? Then I will go to clusters, volume. So at this particular level, we have one contract. Look, 23, 29. We have one contract. You get my point? That is the volume coming. Then when we go to trades, we have 49 trades. So 49 trades making one contract. Retail activity, right? You can also look at the delta. So at this particular level, our delta is 1. Delta is the difference between buyers and sellers. But I know this is confusing you, bro. What are you talking about, man? We're all confused. You're giving us so much at once. No, let's go back and simplify everything. Then by the time I bring you back to the footprint, everything will be so easy for you to understand. Let's go back. So I'm introducing volumes and delta. This is very, very simple. But if you don't understand what I'm introducing to you guys right now, it will be very hard for you guys to understand order flow as a thing. So I want you guys to give your maximum attention to this particular topic. Two things we're going to look at: volume and delta. So Kevin, what is volume? What is delta? That is the question. I've been talking about these terms. I've not explained the terms. And everyone has been wondering, bro, you talked about this. You didn't explain it, man. You're taking us so fast, bro. You need to slow down. Yes. Let's go back to basics. Now I'm slowing down and I want you guys also to slow down and focus, right? So what is volume? Volume is the total number of contracts or shares traded at a specific price during a specific time period. It shows how much market participation and activity is present. And one thing you need to note down is higher volume often signals strong conviction behind a price move. I'm going to show you examples, right? So delta is the difference between aggressive buying and selling. It's the difference. Delta is simply the difference between aggressive sellers and aggressive buyers. It reveals whether buyers or sellers are exerting more immediate pressure, because we said aggression equals you didn't answer, right? I know, because you didn't understand. We said aggression equals urgency. If we have more aggressive buyers, it means price is more likely to go high. More aggressive sellers, price is more likely to go down. So we know delta helps us identify hidden strength, weakness, or potential reversals within the price movement. So this is the example you need to note down. Everything I've been showing you in the candlestick and the footprints, you need to focus right now to understand, right? So before I told you guys, this is how our smart tape looks like, right? So if our smart tape looks like this, it will show us the price, the bid, and the ask. And we said from the bid, we have aggressive sellers. At the ask, we have aggressive buyers. So volume equals the total number of contracts traded at that particular level. So at price 100, we have aggressive buyers 2 and 1 aggressive sellers 2 and 1 aggressive buyers, right? At price level 100, which makes a total of 3 contracts from price 100. That is the volume. And at price 92, we have 4 aggressive sellers and 7 aggressive buyers, which makes a total of 11 traders. Let's talk about this in a standard way, right? So at this level 98, we have 7 contracts sold aggressively and 19 contracts bought aggressively at price level 98, which makes a total contract of 26 at that particular price level, and so on and so on. You just need to add the number of aggressive contracts to sell and aggressive contracts to be bought, or aggressive contracts bought. It is the same thing, right? Just add. But on our delta, which I've tried to use the colors so you guys can understand exactly what I'm trying to bring up. If we do have, listen, one or red, the red color is aggression, the green aggression, selling aggression, the green color is buying aggression. What I want you guys to understand is the colors first, because I'll bring up this next. Red, aggression, selling aggression, green, buying aggression. So Kevin, what is the delta? We said delta is the difference between buyers and what? Sellers. What is the difference? You need to subtract, but you won't do all this work because the platform does this for you, yeah? So I have 2 aggressive sellers and 1 aggressive buyers. What is the difference between these two? 2 minus 1 equals to what? To 1. But listen, 2 aggressive sellers, 1 aggressive buyer. It means in this particular order, or at this particular price level, we have 1 more aggressive seller than buyers, which gives us a 1, or could be a negative 1, whichever you like. I just used colors to kind of make it easy. So it's a red 1, which means these are negative 1, or 1 more aggressive seller than a buyer. Price level 99, we do have 4 aggressive sellers and 7 aggressive buyers, which gives us a positive 3, or a green 3, which means we do have 3 more aggressive buyers right here, aggressive buyers right here, than sellers. 4 buyers, 4 sellers, 7 buyers, which means we do have 3 more 7 buyers than there is sellers. Next price level 98, we do have a big order right here, 19 contracts being sold aggressively. So let's say 19 aggressive sellers, aggressive buyers, 19 aggressive buyers minus 7 aggressive sellers, which gives us a positive 12, or a green 12, meaning we have more 12 aggressive buyers than there is sellers. I don't know if you get my point by now. Next price level 97, we do have aggressive buyers being 5 and 10 aggressive sellers, which gives us a negative 5, or a green 5, which means we do have 5 more aggressive sellers than there is buyers. Next price level 96, we do have 9 more aggressive sellers than there is buyers. So, and so on and so forth. You will do the work by yourself. You will take a screenshot, try to calculate. But what I'm trying to say is all this work is done for you. All the work is done for you. You will not have to calculate. It is simply done for you. And what do you have to do? Let's go back to the platform. Okay, now back to the footprints. We said the platform does the work for you. You don't have to calculate. As a trader, you have no time to calculate all that. The platform simply does that for you. So let's confirm what it does for you. Right now you can see when I come here, I can choose candles. It's going to show candles. I can choose clusters. It will open the footprint. Understand? Whichever mode you like, line chart, whichever, but that's not what we're looking at. We are confirming if the platform is accurate. How is it going to do it for me, Kevin? So in this particular candle that I have highlighted at this particular price level, let's confirm something, right? Which price level is this? The line I'm using. This is 2328.9, right? This is the particular price level right here, so I will remove this. Yeah, now we have mastered the price level. I will bring this highlight to this particular cluster itself. Fantastic. So the yellow one, you see, so we have 31 aggressive sellers and 20 aggressive buyers. That is the cluster itself. Kevin, why is it yellow? I said if I have more traded volume at a particular cluster in a candlestick, it will become yellow in each candlestick. So in each candlestick, I do have a filter on that. You understand? So don't worry about the color. Let's understand the logic behind. You have mastered. On your left is the bid. On your right is the ask. On your left, you have aggressive sellers. On your right, you have aggressive buyers. Easy work. You don't need to worry about the color, bro. So let's look inside. So 31 aggressive sellers, 20 aggressive buyers. What is the total? 31 plus 20, that is 51, right? So let's change the mode from the bid and ask to volume, right? So volume 51. Easy, bro. Easy peasy. You just need to change. You don't need to calculate. Just change the volume. It's going to show you the volume, right? 51. So, Kevin, I want to know now. I do have 51 as the volume. 51, if we change back to bid and ask, it's 31 to 20. So 31 aggressive sellers, 20 aggressive buyers. Kevin, what is the difference? You told us about the delta. In this particular candle, we know we have more aggressive sellers than buyers. You get my point? We have more aggressive sellers than buyers. So what is the difference? We go to the delta. So you can subtract 31 minus 20, and which answer will you get? Negative 11. Easy peasy, easy peasy. You get my point, bro? So now you know that platform is going to do the work for you, but you need to learn, you need to understand how do you use this particular information you've gained in your day-to-day trading. So this is the part we are going to right now, and I don't want it to confuse you guys. I don't know if the lesson is so long I need to cut it, but I feel like right now that you've mastered is the same exact time you need to know how to use a particular piece of information you've learned. So I will zoom back into my footprint. I will change a few things, like I'll remove the highlights so that they don't confuse you guys. So I'll come right here, maximum volume. I'm gonna remove that. Fantastic. So I no longer have the highlights. Like I told you, areas with high volume, they will become white. So I'll remove that. Fantastic. Then I will change the color as well. Maximum volume to trades. I want it to be volume. Then I'm gonna change the color from yellow to whatsoever color. Let me see which color I like. Yellow. I'm gonna leave it to yellow. Value area, you can put your value area or remove it, whatever you like. Custom proportion, you can always change your proportions, yeah, whatever you like. You get my point? So you can increase or decrease. Change that. Fantastic. Bid and ask, whatever you like. So I'll leave it to that. Now let's jump into an example. On this particular chart, there's a lot of clusters that are highlighted. Why? Because today is a Sunday, so there's no much direction for the market. It's gonna be consolidating. So let's change the chart to 15 minutes so we can get something good. Very many clusters highlighted. Let's look at something like Thursday or Friday or Wednesday, whatever we're gonna look at here. Let's look at this. What is this? Monday. Let me look at Monday. Fantastic. Monday might be good. So I'm choosing randomly. I don't want to, like, come check this, check this. Now, if you look at price, your footprint, among these candles, which one has more highlighted clusters? That is my question. Among these candles, I don't need to look at the numbers, the text inside. I can tell off based off color which footprint, which candle has more bright clusters. Look at them all, the blues and the reds. So if I look at all these, I can see that right here, this candlestick has more bright clusters than the rest of them all. And the second one is right here. So I will mark out these two clusters right here. Don't forget, let me delete this first. This particular, look at it. So much activity going on, so much red clusters in. Look, with very, very huge delta, we have more 124 sellers than buyers, more 134 sellers than buyers. So let's say we have extra, yeah, extra, it's a better language to use, better word. Extra sellers being 124 than buyers, extra 133 sellers than buyers. Look, everywhere, extra 162. There is more sellers in this candlestick, and it is very, very bright, right? So where was our next candlestick? This particular one. Look at it. We have 154. I chose the candlestick based off color without checking anything else, right? And it is a Monday. So we're gonna highlight this, right? And we are gonna highlight this, right? So let's check what is the activity happening. I just chose bro, I love order flow, man. I love order flow. I just chose based off color, and you can see immediately as price got to this level, we had a rejection, strong rejection, and price moved down. So if you were to take a trade, set a trade, stop loss above the cluster, bright clusters, and take profit 2 times to your stop loss, 2 times or 3 times. You get a 1 to 2, 1 to 3, whatever you like, based off your capital. But of course, to become a profitable trader, you need to make more than you lose. So your take profit or your actual risk to reward has to be a 1 to 2 minimum, right? And you can see we're on the 15-minute. 15-minute, these 2-3 candlesticks, this price move from this leg up to down is enough for you to get a 1 to 2 or a 1 to 3. Definitely enough. You don't need more than that. You don't need to swing the whole day. You get my point? As that's how I trade. I'm just telling you just a fraction of how I trade. So you can see price got to this particular level and rejected, went down immediately. I chose the price level based of color, based on color. Nothing. I didn't look into the candlestick because I already set everything. You understand? I set everything to tell me. So I know there is more selling activity in this candlestick. I chose based of color in the day because I looked at, listen, I looked at clusters, right? Like this. This is how I opened them, right? I was with you just now. Then I told you, check among all these candlesticks from Monday open right here to where price is going. Where do we have the more highlighted cluster among them all? And we saw we had these two, this right here and this right here. So we highlighted them. And what do we see? Price came, checked here, went down, kind of rejected here, but it broke the level, went down. When it came, it showed that we do have strong selling right here, rejected, came, broke this level, came back here, we've respected it before, we're gonna respect it again, and went down again. So you don't need to stress. Trading is so easy, man. Trading is so easy. I don't know why they confuse everything, they put everything together, they complicate it, teach you a lot of things. It is all crap. Master order flow, master your own psychology, master risk management. I guarantee you profitability, bro. That is it. So easy, bro. So easy. I just looked at a candlestick, man. Looked inside the clusters and we read there's more selling and it is very bright. It is very huge. You understand? And we saw that price did go down. Let's say I'm not using the bid and ask. Let's say I checked based of what? Volume. I can see it is still extra highlighted. Let's say I checked based of what? Delta. It's still what? Extra highlighted. And you can see here with delta. Let's say I checked based of what? Bid and ask. Right? You can still see it's extra highlighted. My bid and ask had removed it. Let me just put it back for you guys right here. Full row. Scheme, bid and ask, fantastic. I removed it. See? Very bright, very bright. It is so easy, bro. It is so easy. After this course, you're gonna thank me. You give me a call and be like, bro, thank you for opening my eyes. Because this is the real deal. This is the sure thing that I'm giving you. It's not a holy grail, because the holy grail in trading is your own self-mastery. You just need to master yourself. This is something that will build your confidence because you will have extra confirmation on everything. You will not trade based off guessing. No, you will trade based off data that is in the market. You get my point? And that is the exact thing we are looking at right now. And I feel like that example is simply enough for today. Let's look for another price level. Let's look for something. Best of color, right? Best of color. Best of color. Where do you see is the brightest among them all? Look at the candlesticks from here to here in this particular scheme that I've given you. What do you see is more bright among them all? What do you see? I'll make it better for you guys. Delta, fantastic. What do you see is more bright among them all in this particular candlestick? Yeah, in this particular trading period. I'm giving you time to choose. I might choose something but you didn't see it. Or you might choose something and I don't see it. Take your time to choose. So I can see that from here to here, this is very bright. Inside here we have two huge bright clusters. Not only them, but in this particular consolidation, we do have bright green clusters. Look at this. Look at all this. Look at all this trading information. Look at all this. Negative 500. 525 more sellers than what? Buyers. Look at this. 2K. Told you this is what I saw. 2K, 2,000 more sellers than buyers. That alone is enough, depending on the exchange market you're trading or depending on the asset you're trading. Now I'm looking at crypto. If I do have a big order like this, I know it's gonna be significant, right? And if we highlight this zone right here, this particular consolidation where we had the 2K, or particularly we can highlight the 2K itself or the candle with a 2000 negative, this particular candle. You can highlight that alone and extend it to the front. And what happens? Price comes to that area and rejects and goes back down. So it is very easy, man. It is very simple, bro. You can trade off only with this, but it will not give you a higher win rate because it's only clusters. With time, we're going to be putting a few things together to build our complete model. And by the end of this course, you will have a simple beginner model to work with. And for extra advanced order flow trading, you will have to subscribe or you'll have to check my course number 2, which is for the advanced information only. So I feel like today's lesson is good if I end it right here. And for you to access the charts or the footprint the same way I'm accessing it, you will have to subscribe for the artist platform. You do have a free plan that you can use, and you will have time to go through the trading platform to understand each and every lesson that I'm giving you guys. You can also subscribe for the advanced or for the paid subscription on the artist platform, where you will have the replay button, which helped me a lot. With the replay button, you can choose specific time, let's say Friday of May, let's say the 5th of May of 2025, and you will go to that particular day and check out price activity during that day. It will help you a lot because you'll get used to price movement, and I feel like that will build you more confidence as a trader because you will be seeing more information happening in real time, and it will build your confidence. Thank you guys for today. I feel like today's lesson was a bit long, but I feel like it is very, very good and enough for you guys to understand where we are going to. I feel like it's enough. It's already building your confidence. So that is very, very good. And I enjoy teaching you guys. You should know that. And please pay attention and not done something. Thank you. Stay safe, yeah?